Hello and welcome to this video. Today I'm going to be doing a stock analysis on Draftkings. Now, if you like this video, please don't forget to like and subscribe. And of course, remember, this isn't financial advice. This is purely for entertainment and educational purposes. Now, if you don't know what DraftKings is, it is a betting platform, but it's also where you can play fantasy football. It usually started out as fantasy football back in 2012, but since then it has become one of the largest bookmakers and also lottery players in the United States, which not lottery players, lottery facilitators, when they acquired Jackpocket earlier this year. And I like the stock quite a lot just because until I believe it was 22, the only state in the United States where it was legal to gamble was Las Vegas. The only state it was legal to gamble in was Nevada, where Las Vegas was. That was the only state where it was also legal to bet online and you didn't have to go through a sports book unless there were some other types of gambling otherwise, but primarily it was Nevada. And ever since that was lifted, it has just been taken off completely. Now I'm going to go over an analysis of the graphs and also just some technicals and the stock as well as some fundamentals. Now I like them a lot at the moment because it just came out that last year they increased their player base by 38%. That is insane. Also just because on average gambling worldwide is skyrocketing, and also that as I said, they acquired jackpockets, which means that now they also facilitate lottery. This would be like casinos, your slot machines, your blackjack, so on and so forth, and not only just sports betting. So it is very interesting. Now, when it came out that they had increased their player base this much, that is this right here. Even though we did see this negative E, which means that they missed their earnings, but they grew their player base. That is why it jumped so high. And then the reason it took this huge tumble right here, that is because it came out that they had taken $500 million into debt for financing for business purposes. What that was not outlined precisely, but it would be normal operating in and investing in the company. Now, if we take a look at the graph, as you can see, it is quite volatile. You can see, let's just go back to November 23, we see it was back all the way down in 26, then we go all the way up here, as you can see, in April of 24, it was up in 49, then earlier this year it was up in 53, and now it is currently trading at 33. So as you can see, ups and downs all the time, and a bit of irregular earnings. As you can see, beat and lost, lost, beat, lost, lost, and we have the next one here in 10 days. Now, for the RSI in this stock is also quite volatile, as you can see here. Sometimes we trade up in the upper RSI for quite a while, and sometimes we trade down in the RSI for quite a while. Of course, every stock does this, but this is more often than not. Now, if you don't know what RSI is, that is the relative strength index, and is it above 50, as you can see at the middle line, and below 70, it is in the upper channel, which means there's upwards momentum. If it breaks through 70 here, it is in a overbought selling point or buying point, which is why it is green up here. And as you can see, they happen sometimes, and they are on sharper rises, as you can see right here. If we go up, as you can see, that's this and this huge spike as well. And the opposite is true once we're below the 50 and above the 30. It is in the lower channel, as you can see here. We're in the lower channel, and look at the graph for this, and we are falling. And then once it pits down here, the pitfalls here, as you can see, we have quite sharp falls. Now let's look at earnings here. As you can see, it is quite interesting. I don't know why the graph looks weird, but whatever. But now as you can see, sometimes they miss them, sometimes they beat them. Here they beat them by 1,448%, and then they miss them by 45%, and then by 68%. So as you can see, it is quite interesting that they do so poorly. As you can see here, well, they don't do it poorly, but they guide quite poorly, in my opinion, and that is one thing I don't like about them, but that is also one of the few things I don't like about them. Now, the dividends, of course, don't pay out on dividends, and why is that? Well, that is because, as you can see here, they don't make money yet. But just look at their revenue. In 2020, they made 614 million US dollars. Last year, 4.7 billion. That is insane. They almost 10x'd their earnings in 5 years, which is beyond crazy. Of course, you can see their net income is still negative, but it is gonna be positive soon. And trust me when I tell you, once it hits positive, chances are the stock is gonna take a quite nice rise, because that means they can pay off their debt. This means they can invest more easily. They can have stock buybacks. They might even pay out dividends. So once they earn money, it's gonna be interesting, and I think it's gonna be this year personally. Now, if we look at the performance of the stock, as you can see, we only have the past 6.5 years. As you can see, some years we trade in quite poorly, and some years we have insane gains. In 23, 219%, 2020, 335%. So it either grows or it falls. You can also see here in 22, down almost 60%, 21 almost down almost 40%. Then we have last year and 2019 up 9% and 10%. That's better than market average, so that's perfectly fine. And then we have these huge years. This year, of course, we are down 8.4%, but I also think that is because of the volatility in the stock market at the moment. Now, if we look at the technicals on this stock here, as you can see, for the day it's a sell, and for the month, surprise, surprise, it is still a sell. And over here in the moving averages, it is a strong sell. Now, the technicals often rely on two things, and that is the RSI and the technicals up here, which would be the SMA. That is at least what my technicals are based on. As you can see, we did have this death cross back in March of 2025, and it has been downhill ever since. Now, a death cross is when the short-term momentum is worse than the long-term momentum, and the golden cross is the opposite. As you can see here, once a golden cross, that is a upward momentum. Death cross is a downward momentum. Now, as you can see, we did see it getting a bit closer, these two lines here, back in the late of March, and we are seeing a better signals here recently. As you can see, they are getting closer and they are going more parallel, except like this, when this one is going down and this one is going more straight. We don't want to see that. We want to see them going more parallel before we have an increase. So that is interesting also, just because it is creating what is called a bottom formation, where it's trading sideways, and that's just to take some of the volatility out of the stock. Now, the analyst rating of this are quite great. As you can see here, 34 analyst ratings, 26 strong buy, 2 buy, and 6 hold. What's not to love? Well, here is something you might need to be a bit wary of. And this can be when a bubble comes, of course. There can't be a bubble within just one company. It has to be a sector. But when someone says something can't get expensive enough, or when there is no sell or strong sell, this might mean that there is way too many people thinking this can't get expensive enough. So that is a thing to be wary of. If you want to buy the stock, of course, you should have ice in your stomach, because analyst rating like this means it's going to increase crazy and it's going to fall like crazy. So of course, if you, let's say you buy it now at 33 and it hits this 54, maybe you want to get out. Just take a smidge off, because maybe then it's going to take a nosedive for whatever reason, maybe either tax increases, and also just because betting is not quite an ethical business. It's the same with smoking and alcohol, so that is also something to be wary of. Some institutional investors won't trade with companies that do stuff like this, primarily betting and nicotine, like smoking and stuff like that. Those are by far some of the worst. It used to be weapon stocks as well, but ever since the Russian invasion, it's not the same. So that is a one thing to be wary of. And as you can see here, just as I said, I think they're going to be making money, and so is the estimates. And as you can see here, it is just expecting to boom. So I don't own the stock personally at the moment, but I am considering getting into it heavily. I am waiting, however, for a bit better technical signals to see them increase before. And that's because, as well as I am a fundamental investor, I also am a technical. So I want to see them gaining a bit more, just because it is so volatile as it is. Now, if you like this video, as I said, of course, like and subscribe. And if you want me to make an analysis of any other companies, please leave them in the comment sections below.